Hey there, welcome to my channel. I'm Gloria Adeoye, popularly known as the Pip Grabbing Chick, and this is a channel where we teach you not just to trade, but to trade to profit. Every strategy taught here in this channel are strategies drawn from market structure, because like I always say on all my videos. By the way, if you're new to the channel, don't forget to subscribe and watch all the other videos I've done on the channel, because on the other videos I talked about how it's very important for you to not joke with market structure. I don't care what strategy you've been sold. I don't care what analysis or whatever someone told you. Market structure is the way. I don't care the indicator you just bought or the E or whatever. Market structure is the way, and this is a channel where we teach you how you can trade the market using market structure. It's the holiday, isn't it? It's the holiday. So what does that mean? It means we're going to be seeing a lot of crazes going on in the market. Now, this chart you're currently looking at is the gold chart. Now, why am I interested in the gold chart? The reason I'm interested in this is because a lot of people are looking to go long on this, and the market has been, taking them on a jolly ride. So the question is, why is the market doing what it's doing? Is it because of the Omicron, or what exactly is the reason behind gold's erratic behavior? As you already know, gold is, it is an investment, a safe bet, it is an instrument, something that people tend to hedge their money on when the economy is kind of iffy, shaky, and all of that. So whenever there are some kind of fundamental stuff going on in the world economy, we tend to see that reflected right here in the gold market and all the other indices. So gold, two things, right? Let us look at the market structure, like the structure of gold first. Like, let us even begin to categorically study the structure. As you would have seen in my previous videos, I'm always of the opinion of you doing a top-down analysis, begin your analysis from the higher time frame, begin to drop down slowly, all right? Because when you do that, you get to have the whole big picture. Yeah, if you've not seen all those videos where I've religiously preached that, you want to go check those videos, because I've been very generous on this channel. All right, so go check out all the other videos on how you can begin to do a top-down analysis on your trades. Okay, so this is a daily time frame, and on this time frame, we're seeing gold at a zone. It is very important that you should always take note of market zones or market levels, because taking note of market zones and market levels will save you a lot of stress, because most people tend to just trade, wherever they see market, they just go and just trade it. But you taking note of market zones and market levels will help you limit long entries. And as you know, your chances of profitability in this market hinges on proper entry. Like, entry is king. You can't go wrong with entry. Because if you're wrong with entry, you're going to be losing more than you make. And that's not a goal as a trader. As a trader, you want to make more than you lose, because that's when you know that you're actually in business. So gold currently is on a zone, and as we're trading things on a zone, you always want to take note of two things. The market could go either way. It could break out of that zone and continue in one direction, or break out, or not break out of the zone and continue in its initial direction. So it's very important when price is at a zone that you don't rush in, right? Because when you rush in, then you do what they say, that fools rush in. So you don't rush in. You always want to hang on and wait. Or as some traders are fond of doing, they begin to scalp opportunities. So see, all of these levels previously, the market has pretty much been meandering around this level, meandering around this zone. There was a break, a quick reversal, and the market went all the way up. It came back, bounced, and broke out. It hasn't been able to come out of this zone. So that's to say that a lot is going on around here. So two things: it breaks the zone and continues in downward direction, or it doesn't break the zone at all. So I, for one, I'll advise you to just stay clear of the gold market for now. That's just what all of this story is all about. Stay clear of the gold market for now, because you're doing so will save you a lot of stress. So when the market moves, as in gives you a clear direction, then you can now begin to trade. So you don't want to make the mistake of thinking for the market, like, oh, it's going to buy. because doing so will put you in a lot of pressure. All right, so If we go down to say 4 hours, so because I know some traders say, okay, how about you look at it on the 4 hours time frame? Because doing so, I'm seeing something on the 4 hours that looks like my bias for a buy is legit. Okay, so we are currently on the 4 hours time frame, and as we saw on the daily time frame, this level, this zone is still holding, it's still there. So guys, my advice, stay away from the gold markets for now. Don't try to FOMO it, because doing so puts you under a lot of pressure. So stay away from the market. Another thing to also note, other than the Omicron and all the things going on in the world, this is also, it's almost Christmas. So, so things tend to happen around this time. So give gold time, give it time. Say next year or thereabout, you're gonna begin to see some kind of actual market direction that will give us a clear insight as to where we want to go. All right. So, like I said, this is the market. This is the channel where I teach you how to trade using market structure. This video was just done for the gold analysis, because I know a lot of traders are looking to trade gold, and most of them are stressed out trading gold. So you want to, like I said, stay away from it for now. Observe it. Staying away from it doesn't mean that you shouldn't, keep your eye on it. Stay away from it means that don't put your money in it yet. Wait for it. Observe it. Study the move. Let it give you a direction. Let it tell you clearly that this is where I want to go. Because here we're seeing a V-top, and it has completed the V-top. So where's it going to go, up or down? So you want to wait, guys. Come on, wait. So waiting will save you a lot of stress. All right. So thank you for watching. I'll see you in the next video. In the next video, I'm going to talk about a strategy, because from time to time I bring out strategies called from market structure and teach you guys. So if you're new to the channel, don't forget to get subscribe. Click the notification bell so you don't miss out on any video. And if you've not seen the previous videos, you want to do so. Why? Because if you're new, especially if you're new to Forex, I did a 10-part video, guys, like a 10-part video teaching you from beginning, from A, of trading down to somewhere good enough for you to say, okay, let me go see what this whole Forex is all about. So that 10-part video is somewhere on the channel. Go check out the video if you're really ready to trade. Thank you for watching this video. I'll see you again next time. Bye bye.